It's about that time of day again here, boys and girls. Newsletter time. JJ here. SchoolOfTrade.com, SidewaysMarkets.com is our blog address. Welcome back to your nightly newsletter. Tonight is December 16th, 2014, and 'tis the season to be selling. Did you get short with us? I mean, please. I gave you plenty of markets. Gold, sell off the high. Russell, sell off the high. Crude, sell off the high. I could talk about that for an hour here before we get into the first chart today. But before we jump into our nightly newsletter, before we take a look at what happened today and give you some strategies for tomorrow, and tomorrow, don't even get me started about tomorrow. Okay, do not finish this newsletter until you get to the end of this video, because we have a quadruple whammy in store for us tomorrow on Wacky Wednesday, right? Wait till you see what we have in store for tomorrow, right? It's going to blow your hair back. Before we go into it, though, make sure you're watching this video on our trading blog. SidewaysMarkets.com, if you're not watching this video on our trading blog, if you're watching the video right now on our YouTube page, you owe it to yourself to follow the link below the video and get over here to the newsletter homepage here on the blog. 3 reasons. Right below the video, you can download all of my charts. All the charts that I've worked on this evening, you can have on your computer ready for tomorrow. Second thing, free pass here, upper left-hand corner. If you're not a member of SchoolOfTrade.com and you're wondering what it feels like to be inside of our trade room, I'd love to send you a free pass. Come out and join us here this week in the trade room. And of course, lower left-hand corner, right above my ugly mug, you'll see a spot to register for our nightly newsletter mailing list. That way you never have to worry about missing another newsletter, right? You'd hate to miss all those good trading jokes in that newsletter. So guys, 3 things on today's blog. First of all, download all the charts. Have those ready for you for tomorrow. Upper left-hand corner, grab your free pass. Lower left-hand corner, register for the newsletter mailing list. Guys, if you grab a free pass or if you register for our mailing list, I'm going to send you an email to verify that I've got the right email address and that you are not a robot. All right? So make sure you join the free pass, the newsletter list, and download those charts for tomorrow. Now, giddy up. Starting here with the mighty Russell here this evening, 32 anchor. Now, just like we had expected, okay, rewind the tape, go back to last night's newsletter. My exact words were, don't you dare sell right there, because you know it's going to make it too difficult on you to sell right there. It's not going to be that easy. It's going to go back into the range, and then it's going to sell off. We might just know what we're talking about around here. So again, if you sold right there, you get your head taken off. You might get a little bit of profit out of it before it ripped your head off, going back inside that range. The real traders here today, though, they waited patiently for that spike back up, right? Shake out all those initial sellers, and then all the real professional sellers have now entered into this trade short. So we are definitely on the bearish side right now for all you Russell traders out there, pretty much all the other E-minis as well. This time of the year, I mean, how could you not be taking some profit of those all-time highs in the S&P, the Dow, the NASDAQ? Anyways, right now in this chart, though, we can easily see heading lower. I will continue to look for selling opportunities, long-term, of course, selling opportunities up here at 77.5, 59.6, but as you can see here, we are quite a ways away from that right now. I have a target down below me right now. We've got targets at 13s, targets here at 65.7, and I don't think we get there tomorrow, but all the way down to that low at 10.30, right? That would be the ultimate long-term target. Right now, though, we're looking for selling opportunities here on the Russell. Most important thing right now for the Russell that you want to remember is stay patient and sell at those highs. Boy, what do you think? Was that accurate enough from last night? Was that accurate enough from last night? I know I missed it. It went to 54. I told you 53. I know. Can't be perfect, I guess. But as you can see, though, this is exactly what we talked about, right? Do not sell these lows, right? You sell those lows, you're just giving money to people like us, right? Wait for it to go up. Right when you think those buyers have taken control, bam, right back down to those lows. It was easy. I mean, maybe it wasn't easy, but it sure as heck wasn't difficult. That's for sure. So just as expected, easy money today, selling the highs. Now look for more. Now here's one thing. Do not sell right here. Okay, promise me, okay? If you want a couple reasons why you should listen to me, just go back and watch any of the previous newsletters over the past year, right? You'll see what I'm talking about. Okay, looking to sell 38.6, 42.2, 48.9, right? There are 3 sell zones. If I had to guess, if I had to guess, right? If I had to guess which sell zones would be the ones I would unload on, it'd be 42.2 and 48.9, right? If I get up to that 48.9, wink, wink, nod, nod, right? We saw what happened today. Again, right when I start to feel like, ooh, man, these buyers might be in control, that's exactly when I want to be thinking about selling. Remember, what comes natural to a human is usually the wrong thing to be doing as a trader. Okay? Remember, sell those highs, sell those highs. Now, for all you price action traders out there, right, if indicators give you hives, then here's a price action chart, right? No indicators on it, just candlesticks. I got one indicator on it, right, and a couple levels. Here we have the Russell price action chart. Now, jump up out of that sideways range, right? You can see the range we had to begin the session. We jump up. Remember, this was a sell zone we had on the newsletter last night. So we jump out of the trading range. We can't quite get up to that prior high, right? We fail here on the way back down. Draw a little Chanel or a little Chanel on the way back down, and got a little bit of an overshoot right here. Little bit of an overshoot. I may have drawn that channel a little bit too tight, so that may not be an overshoot. But we do know one thing's for sure, though. Overshoot or not, we're looking at 2 things here. Give me a big clue to expect price to go up and then back down. 2 big clues on it. Members, you probably know what I'm thinking. First of all, where do we sell at a channel? We sell the highs of the channel. So I'm definitely looking for a possible short at the high of that channel. But it's just too tasty. It's just too easy. 41.3, right? That's the high of the range. You might have heard me say this before, right? Wait and sell the highs of that range. So that's what I would be waiting for all you price action traders in the Russell. You got sell here at 41.3. Kind of a range here between 48.3 and 46.3. And then I don't think we get back up there all the way. But if we do happen to get up to 53.9, sell those 2. Okay? Now, one thing here before we go, that trading range. You got to be thinking breakout strategy right now. Okay, for all the members here at SchoolOfTrade.com, you should know what I'm talking about when I say breakout strategy. 3 options, right? Retrace, pullback, right? Retrace, pullback, fade, trap, right? The 41.3, members, that's a trap. Okay, the next one's going to be a fade, next one will be a fade. All right, and then, of course, if we happen to go lower, you get your retrace. All right, guys, so you know what the plan is here. Stay to the sell side. But do not sell those lows. Do not buy those highs. Sell the highs, buy the lows. And how about that gold? Moving from the Russell here to the mighty Russell, that funny yellow metal. Gold continues to get stuck back at that 1200. Just when they think they're out, they pull me back in, right? We continue to sell the highs with the target back at 1200. You know, that sounds familiar. Is this the same video from? Yes, it is. Yes, it is. It's the exact same. It's the exact same strategy. I'll save you the time, right? This is the exact same strategy. Now, I have, because we're up near the highs, I have a bearish sentiment to it, right? I have a bias to the upside. If we were down at the lows, I'd be saying buy these lows and go up 1200, right? So right now, honestly, this is a really tough spot to be in if you're gold, right? This is a tough spot to be in. We're pretty much right in balance, right? Think about it this way. What I'm looking for is, if this is my 1200, being at 1200 is not where I want to be trading, right? I do not want to be going anywhere near 1200. So what I'm going to do is I'm going to wait for price to get out of whack, right? I'm going to wait for it to go up, right? And then I'll sell it back to 1200. Wait for it to go down, bubble, or back up to 1200, right? So we're going to be buying down at the lows, selling up at the highs. But that's why I said right here, you really got to be careful right in the middle. You know, Mama says don't fiddle with the middle, and that's where we are right now. Okay, so just be careful in this area. This is an area where I'd rather not be trading, right, to be very upfront. As you can see from yesterday, though, we go down to this faster time frame here. Remember this from yesterday? This was awesome. This was awesome. Remember this from yesterday? This is on yesterday's newsletter. So yesterday's newsletter, my exact words were, we get an overshoot on that channel, right? Don't take my word for it. Go back and watch last night's newsletter, right? My exact words were last night, that's an overshoot of the channel. Remember what I said? Expect a dramatic correction all the way back up and then all the way back down. We stroked it. It was, literally, you couldn't have scripted it any better than a movie. So we knew exactly what to expect on that gold, right? We got that big snap back all the way up to that 1223 area, and then look out below. And you can see here, what beautiful price action, right? Wave 1, wave 2, wave 3, all the way down. Then again, another little overshoot. Right? Another little overshoot there on the sell side. So that, that definitely leads me to believe that we're probably going to get a little bit of a snap back here, and then we'll, chances are, get another chance to sell this sucker. Again, do not be trading around 1200. Stay patient. Now, this area right here, 1204.2 to 1202.3, you'll notice it's a different color red, right? I kind of colored it, tomato. You say tomato, I'll say tomato, right? But basically that area, that 12023, 1204 area, it's the least attractive for all these sell zones, right? See, the way that I look at it is, if you're going to take a reversal, I want it to make me some money, right? If I'm going to take a reversal, I got to get some cash out of this thing. So will I make more money if we get a short at 1204, or will I make more money if I get a short at 1216? Definitely the higher I go, right, the more incentivized I am to load up and get short. So the first zone here, 12023, 12042, it's a good-looking zone, but again, you get 20 ticks, right? Not a huge move back to 1200. So again, if I had to choose, I would say, go light on the first zone and then go really a lot heavier as you go higher here, right? 12059, 1216.2, and then again, if we happen to get up 1223.9, I'm selling. So the best thing that can happen for us gold traders is to see a spike higher here overnight. And then going into the U.S. session tomorrow, ahead of FOMC, we know that we're probably going to normalize back to 1200. Now, I'm going to talk about FOMC a little bit later on today in our newsletter, but while we're on the gold chart, that is definitely going to be something to be careful with tomorrow. If we are at 1200, stay away from the trading, guys, okay? 1200 is going to be a natural magnet, and again, I'm going to talk more about this at the end of the newsletter tonight. Tomorrow is not the day to go testing your luck on gold, okay? Let's put it that way. I'll tell you more about it in a moment. Now, Another great day of price action trading here on gold. Just as we expected, we pushed higher early and then collapsed all the way back down. Look at that trading range. Now, this is why I love price action. Who would have thunk that little bit of consolidation at the beginning of the day could be so accurate at projecting where we finished the day today? Isn't that incredible, right? You gotta love technical analysis, right? Isn't it incredible? It really is. If it doesn't get you excited, you're probably watching the wrong video right now, all right? So we get, buyers grabbed it. And this is look at this price action. Does that look like normal price action to you guys? Hell no, right? That looks about as calm, cool, and collected as a Black Friday Walmart $50 gajillion inch television set, right? The whole herd, right? Open the doors and blammo. Again, this is fire in a movie theater, right? This is panic buying right there. I don't know why. I don't care why. But all I know is when I see a straight line, guys, markets don't move in straight lines. They don't. Do you? Do you go run for 3 days straight? No, you don't. You run a little bit, you take a break, you run a little bit more, you take a break, you run a little bit more, right? Nobody keeps that up. So when you see that big jump up like that, you got to be thinking, oh, I can't wait to take this in the opposite direction. That's the term big pops equal big drops come from. So here we are. We finally find our way off those highs, right? 1, 2, back into consolidation. I mean, this is textbook price action right here. This is textbook price action. So now we find ourselves back in a trading range, and you know what we do in a trading range, right? 3 options, right? You got retracement pullback, you got a fade, and you got a trap. So we look at this and we say, okay, I'm not going to go anywhere near this 1200, right? Or else normally I'd be telling you to sell that high as a trap, trap, right? Bear trap or bull trap. Okay, I'm not going to tell you to sell there because, again, it's 1200. But I will say, though, we get a nice little fade, 1204, right? Kind of the lower end of where I'd be looking to fade. The nice fade, though, 1212. Keep going, 1218. Okay, and I have no idea how many of these levels we're going to see tomorrow, right? I have no idea if we're going to torch right through the first 2 and then get the collapse at the third one. I will be looking at them just like you will tomorrow. I'm going to wait for price to get to each of these levels, and I'm going to look for what? A pattern. A pattern simply tells me that I have the appropriate time to get into a trade with the least amount of risk and the most amount of reward. That's all I got to worry about for tomorrow. Okay, I don't worry about losses. I worry about big losses. Don't risk more than 2% of your account on any given trade, and make sure you follow that plan. That's all we have to worry about tomorrow. And remember, guys, if you don't have a plan, if you don't know how to calculate your personal risk profile, well, then you are a gambler. You're not a trader. If you want to be a trader, come out and see me tomorrow. I'll give you my plan. I'll show you how to manage risk correctly. That way you're not just coming in, crossing your fingers, closing your eyes, right, and taking some tip off my blog the next day, right? You don't need to. I got a plan for you, and I look forward to sharing it with you. Now, how about some crude? Boy, crude was fun today, wasn't it? Monday made me want to jump into one of those barrels of crude and drown, right? Monday was a painful price action session. A lot of emotions came in on Monday. Today was just rocket fuel. Today was fun. Made money on the way down, made money on the way up, made money back on the way down. If you were with me today in the trade room, right, we were selling short right out the gate this morning because I heard the trend was down. Right? So we started the session selling short. At 9 o'clock, though, the buyers literally, I thought Wacky Wednesday was tomorrow. Because today, these buyers just took this thing. And we knew the whole time, we knew that buying on the way up was an option, but we knew that we had that sell zone waiting overhead, right? I updated these charts. That zone's not there anymore. But it went right into the sell zone that we gave you last night. So it was sell at the early part of the session, buy on the way back up after the U.S. Open at 9 o'clock, and then up into those sell zones. And we knew this was going to have a hard time going higher, right? Nothing's changed. They're still calling for $40 a barrel right now. We heard from even more of the oil ministers out there talking about the middle of next year, right? My swimming pool in the back of my house is almost filled with crude oil, stockpiling this stuff, right? I'm sure a lot of people are. I'm joking, by the way. I don't have a swimming pool. I'm kidding with you. And now we have, honestly, here's what I think happened today. I honestly think that we may have had rollover. Well, here's the deal. We got that huge spike at 9 o'clock. That it didn't really feel like this fundamental shift. It was so just bam, right to the highs. Again, it was just kind of like panic buying. It felt like a bunch of people who have no idea what they're doing. They either all decided to buy, right? They woke up today and said, "Oh my goodness, $54 a barrel. We should buy this," right? Unless you've been living under a rock, you're crazy to be a buyer right now. So the only explanation for that big jump up today, and again, I'm going to say right now, of course it's a good deal to buy at 54, unless you've been watching this for the past few weeks, right? How do you seriously buy and hold from here, right? That takes some cojones, right? I can't say I recommend that. So I'm thinking, okay, we saw such strength of these buyers coming in right at 9 o'clock, right? It was literally right at 9 o'clock. It was right at the opening bell. We went right up to, 11 o'clock, something like that. And then we made the collapse, right, and sold it back down. Maybe it was rollover. Maybe we had yesterday, maybe people came in, they rolled over, right? And how do you roll over? You get out of your current position and you get into the next front month position. That's the only way I can describe it. Either way you slice it, I mean, it did what we were trying to get done, right? It got up to those highs. We can now get short on that. But the way that it just broke up to those highs at 9 o'clock, again, feeling like panic buying, and unless you live in Iraq, you wouldn't just do that. The only thing that makes sense to me is all these bears getting out of their shorts, right, of the January contract. That causes that kind of fluttering higher. Of course, the speculators buy it up, and then they get back in on the February 15 contract, right? That's all I can think of here, right, going into tomorrow. So we know that we have jump up. We're still short. We got rollover for you tomorrow. I'm going to talk more about that in just a moment. And we get a target down here at 54.36, 54 even, right? So we got a nice little target there waiting for you. We actually have 3 targets here for you guys next couple days here. 54.36, 53.35, $52 a barrel. Guys, that's going to be your measured move. $52 a barrel. We're going to come back here January 1 with $49 a barrel. Wow. Incredible. They'll be paying us to fill up our gas tanks here in the U.S. So we know we got rollover tomorrow. It's most likely guaranteed going to be tomorrow. It possibly was today, but it did not happen today. So it will be tomorrow officially. We'll see the volume roll over tomorrow. And again, I'll be putting up charts tomorrow night for the 215 contract. All right. Now, moving forward here on the crude, we go from the 32 to the 16. And really what I'm doing right now is we know the state of the short side, right? I mean, we know the plan right now. I've got 56.92, 56.73. I've got 57.63, 58.73. So we got a lot of areas here that we have overhead. This is easy stuff, right? No surprise here. I've been saying this pretty much for the last 6 months. Just wait for crude to get up to these sell zones. Find the pattern. Don't just blindly sell these areas. Find the pattern. Now, guys, here's something that gives away a heads up for tomorrow. Okay, tomorrow we have a very, very interesting scenario. We're going to have contract rollover. We've got FOMC. We have inventories tomorrow, right? And just to throw some more fun into the mix, right, we also have, of course, tomorrow's Wacky Wednesday of quadruple witching, right? Yeah, I know. Let's see if we can get one more thing into tomorrow. Now, that is one thing on its own. But now we have a chart pattern. This is a megaphone. We do not see this very often, right? Look on your charts. You don't see this very often. That's higher highs and lower lows, right? See why it's called a megaphone? Looks like one of those things they scream into, right? Right? So, call it a megaphone, call it an inverted wedge, call it a negative triangle. I don't care what you call it, but that is a rare price pattern. Basically, when we see something like that in the middle of this range, ahead of tomorrow, right? Rollover day, FOMC day, inventory day, Wacky Wednesday day, right? I'm going to go out on a limb here and say we might just get that self-fulfilling prophecy kicking in tomorrow on crude. Okay? People know it's inventory day. That's going to cut some folks out. There has always been this stigma around rollover day, which I think is laughable, but I always get a lot of questions every week, is it okay to trade rollover? Of course it is, right? You can't mess this up. I mean, rollover is not expiration, guys. Rollover is just when the volume becomes greater on the next front month. It's not like you're going to get a barrel of crude oil at your doorstep if you don't do anything, right? So it's not expiration tomorrow, it's just rollover. Rollover is when traders move to the next front month because of volume, right? Once the volume is higher in the 215 contract. There's a link below the video tonight, by the way. You can learn more about quad witching. You can learn more about rollover. Follow that link. So, my gut doesn't trade for me, but right now my gut tells me this is going to be our range for tomorrow, which is fine by me, right? I mean, everyone thinks sideways ranges aren't very fun. I love sideways ranges, right? Hence the Russell. Look back the last few weeks of the Russell, right? So sell lows. Do not sell lows, right? Sell the highs, buy the lows. Sell the highs, buy the lows. Sell the highs, buy the lows. I'm looking at 57.15. God, it's so crazy to say 57. I want to say 75. It just feels wrong. I feel like there should be a 1 in front of that right now. 57.15 the high, 53.60 the low. And if we happen to go cray-cray here tomorrow morning, we got $52 a barrel. Remember, that's the measured move. Gosh, I don't think we get there tomorrow, but wouldn't that be cool? Wouldn't that be fun? Okay, so again, price goes up, sell the high, price goes up, sell the high, price goes up, sell the high, right? You guys get the point there. Very easy strategy here for you cruisers out there. And then again, what a fun day it was today. What a fun day on the price action it was today on crude, right? You know, we started off, like I said before, we started off here, right? We're selling short. Easy, easy, easy. Then literally right at 9 o'clock, it just goes, see ya, suckers. And I mean, it moved very, very quickly, right? I mean, this was from 12 a.m. down to 9 a.m., right? There's 9 hours right there. Then we go 2 hours, right? Straight up. 9 hours to go down, 2 hours to go up. Again, not typical. So that's what, you know, and again, we were talking about this in the trade room today. I said, boy, it really just took off like a rocket ship at 9 o'clock, and you just don't normally see that type of environment that quickly, that consistently. And so I'm thinking, okay, no one who's been following crude the past few weeks would be buying that aggressively right now. I mean, maybe they are. Maybe I'm the crazy one, right? Maybe I'm the crazy one. But I mean, boy, you've really got to have some, you know what, right, to be able to be that buying that strong like that, right? And so the whole time we're watching it go up here, we're going, all right, I sold the high here, made a little nibble on the way down, sold it again, made the big move on the way back down. You know, we're buying it up and then selling the highs again, and then we go sideways. Look at these great traps here. What a great trap, right? Nice bull trap right there. That was the best trade of the day as far as I'm concerned. Right, come off that high. You know those buyers are thinking we're going to make another run back to those highs again. Right, they try it. Just a beautiful reversal candle off the high, and we roll right over. So now we wrap up the day here. The buyers failed, right, to go back up to the highs. I mark up my trading range, and whenever you see that silver rectangle on my chart, whenever you see a trading range, you got to be thinking one thing: breakout strategy. Okay, retrace, trap, fade, right? So if we go higher here, right, you get a trap up there at 56.44. I get a fade up yonder at 57. Okay, so we get easy spots above us. And then tough to tell what's going to happen here overnight. Again, like I said, we get a lot going on here. But I would think we go here lower, right, retrace, 54.79 target, 53.92 target, right? So we got some good options here right now. I get a fade short at 56. What the hell was that? 56.44, 57 even for the fades. And then if we go breakout retrace, we're looking at 54.79, 53.92 on the way to the downside. Now, guys, sorry about that. Last chart in the sequence. Let's talk about tomorrow, right? Let's talk about tomorrow. Now, you might want to get the children out of the room for this one. This is going to get ugly. Okay, this might give you some nightmares here. You know, I like to have some fun. This is a relatively boring topic. Well, if you call it making money boring. But anyways, I like to have fun with you guys. All right, so we got the news tonight, right? Let's talk about what's happening tomorrow first. Okay, let's go through the list of what's happening tomorrow. Tomorrow is FOMC day. Okay, tomorrow is inventory day. Tomorrow is rollover day. And tomorrow is the Wednesday of quadruple witching, which we call Wacky Wednesday, right? Wednesday is the day when professional asset managers, okay, the guys and gals that actually move these markets, they are going to be manipulating their portfolios so they are prepared for the last day of trading this week, which is Friday. At the end of the day on Friday, 4 different asset classes expire. That's why it's called quadruple witching. Okay, triple witching, which is regular OPEX. Okay, every month, the third Friday of the month, right, is OPEX, or what they call triple witching. 3 different asset classes expire. We have every 3 months, right, at the end of each quarter, March, June, September, December. At the end of the third week of December, we have our quadruple witching. and it's one of the biggest ones of the year. As you can guess, it's the last one of the year. We have the last FOMC meeting tomorrow. We have not the last inventory report. We'll still get 2 more of those. We have the last rollover of 2014. That's crazy to say. And we have the last Wacky Wednesday of 2014. It's really kind of sad when you think about it, right? I'm looking forward to the holiday. I've worked my tail off this year, and I'll bet you have too. So I'll bet you're looking forward to some time with the fam and soaking up the holiday season. Let's see here. Merchandise trade tonight. Talking about news here tonight, 6:50 p.m., right about right now, actually. You'll see that merchandise trade come out here in just a few moments. Then we go tomorrow morning in London. We got a lot of news tomorrow, right? We got the Labor with a U, right? Labor market report at 4:30 a.m., right? That will be a market mover. You've got in the U.S. session, we've got the consumer price index, then the inventory report, and then we got FOMC, all in the U.S. session. Okay, so tomorrow in London, starting at 4:30, 5 a.m. Eastern time, be ready for that. And really, tomorrow is going to be a day where you're going to have to get at this early. Okay, the way that FOMC works, typically speaking, tomorrow is kind of one of those days where it may be completely just batty tomorrow. But typically speaking, though, for FOMC, it's going to really slow down after 11 a.m., right? So you want to get to make that money early tomorrow morning. So if you're in London, you got some good opportunities there with some big news coming out. And then in the U.S., you've got 8:30 a.m. CPI, and then we got 10:30 inventories. Remember, come see me tomorrow, and I'll walk you through how we're going to trade inventories. Inventories on crude oil are a very delicate situation. There's only a few news events out there, kiddos, that apply to one market. Okay? Crude oil inventories is one of them. Remember, there aren't many news events that only apply to one market, and that's what we have tomorrow. So tomorrow, again, like I said earlier, we've got rollover and we have inventories. Something tells me the weak traders out there, right, the unconfident traders, they're going to step aside tomorrow. Right? They're not going to be trading it tomorrow. So you're going to have a little bit of self-fulfilling prophecy tomorrow, making that volume a little bit lower than it normally is. And then we go into FOMC. Now, guys, here's the deal. My rule of thumb, and I tell this to every one of my clients, if you have not seen and traded on a simulator the reaction to FOMC at least 3 times, don't go anywhere near trading that report tomorrow on a real account. All right? Do not be a donor to the market. Okay, you can do that some other time. But for tomorrow, though, unless you have watched and traded 3 of these FOMC announcements, tomorrow you're watching. Okay, be careful. Tomorrow's news event is one of the 2 news events. There's only 2 of them. We got one 2 weeks ago, non-farm payrolls. There's only 2 news events out there that have long-term impacts in the markets. One is tomorrow afternoon at 2 p.m. Eastern time. Okay, do not mess with that bull or you're going to get the horns. All right, guys? So, key components here for tomorrow. All hell breaks loose tomorrow. We got rollover, we got inventories, and we've got FOMC. Be careful. Be careful. All right? Not the day tomorrow to be test driving a new strategy. Okay, tomorrow's a day to keep doing what you've been doing. Keep riding the horse that brought you here. But I personally will be trading smaller size. I'll be more conservative. And a lot of that has to do with the fact that I'm a crude trader. So I'm going to be dealing with rollover tomorrow, dealing with inventories tomorrow. Okay, it's going to be a challenge most likely. Hopefully I'm wrong. Be careful ahead of inventories. Come see me tomorrow if you want me to give you my strategy on the inventory report at 10:30. And then again, please be careful around the FOMC report tomorrow afternoon. All right? We'll talk more about what to expect into the rest of the week in my last newsletter for 2014, which will be tomorrow. Tomorrow will be my last newsletter for 2014. Boy, I must have done like 1,000 of them this year, right? I mean, literally, we did a ton of them. So awesome year so far. We got one more newsletter left. Guys, I want to thank you so much for being a part of my newsletter. It's been a record-breaking year for us here at SchoolOfTrade.com. Just what an incredible year of 2014. So words cannot describe how much I am thankful, how much I appreciate all of your hard work, tuning in every evening, giving me your feedback, right? Just you guys rock. You guys really have made this year again a record-breaking year, a extremely profitable year, and it feels very, very good to be wrapping up this year of 2014 on a really, really strong note. The last few weeks have been absolutely incredible. So guys, it all goes out to you. It all comes back to you guys. I want to thank you so much for being a part of the newsletter. Thank you for watching tonight. And I've got one more encore newsletter for you guys tomorrow night before we wrap up here for 2014. Don't forget, we got a free trial over here at SchoolOfTrade.com. We got 3 levels of membership: beginner, intermediate, and advanced. And we always have someone standing by to help you guys out 24/7, 365 if you have any questions. My name is Joseph, broadcasting from a rainy day here in Los Angeles, California, our corporate headquarters of School of Trade. You guys have a great evening. Okay, don't forget to follow the plan tomorrow. Don't do anything crazy tomorrow, all right? And come back and see me again tomorrow night. Same bat time, same bat channel. You guys have a great day out there. Adios, amigos. Bye-bye for now.